There's a new car loan interest deduction, but that does not mean your entire car payment is a tax write-off. So which cars and which loans actually qualify? Let's break it down. First, what it really is. Starting in 2025, you may deduct the interest on a qualifying car loan, not your principal and not the whole payment. It runs through 2028. How much? You may deduct up to $10,000 of qualified car loan interest per year, and you can take it even if you don't itemize. But not every car qualifies. The vehicle generally has to be new, used cars don't count, with its final assembly in the United States. And it has to be a personal use passenger vehicle under 14,000 pounds. And the loan has to qualify too. It generally must be taken out after December 31st, 2024, and be a first lien secured by the vehicle. You claim it on Schedule 1A, Part 4, using the car's VIN. And here's that form. This is the actual Schedule 1A, Page 2. From the IRS, Part 4 is the car loan interest deduction. You enter the vehicle's VIN and the interest you paid right here. Now, what does not qualify? Lease payments don't count. This is for a purchase loan. Used cars don't count. And neither does the principal part of your payment or a loan you took out before 2025. And here's a key limit. This one phases out at lower incomes than some of the other new rules. It starts shrinking once your modified income passes $100,000 or $200,000 on a joint return. Quick examples. Buy a new U.S. assembled car for personal use with a loan after 2024. The interest may qualify up to the limit. Lease instead of buy? Lease payments don't qualify. And remember, only the interest, not the principal, may count. One quick note on who makes this. The tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience. So the rules you're hearing are checked against the IRS sources, always educational, never advice for your specific situation. So the plain English summary, it's a deduction for the interest on a qualifying new U.S. assembled personal use car loan up to $10,000 a year for 2025 through 2028 with income limits claimed on Schedule 1A. Not the whole payment, not leases, not used cars. This is the federal rule. Your state may differ. This is general education, not tax advice, so check with a pro. Subscribe to the Tax Breakdown for tax rules in plain English.